Can you guys hear me?
Yeah.
Hello.
All right. We're going to revisit trend lines and support and resistance. All right. We use GBP USD. Can you guys hear me?
Yes.
Yeah.
Yes.
All right. So we're going to use GBP USD, and today, instead of doing the analysis on the higher time frames, I think we should look at the 4-hour time frame and the 1-hour time frame.
Can I ask a question?
Yes.
Can we do the top analysis once more, where we stopped yesterday, and continue from the weekly down to the 1 hour? If that is okay.
From the weekly down to the 1 hour.
Yeah, just like a quick, the quick top analysis.
All right, sure. So, on the weekly, so this is our weekly time frame, and we are going to draw our closest zones, the zones that are very near to the price, the zones that are very close to the price. Those are the ones that we're going to drop. Those are the ones that we are going to be using. So, if we look at the weekly time frame, we have a zone, right, where price is at around that area, which it has been failing to break for a long time now. It's been weeks. And then we have support around here. Now, this support was actually created by these highs. So from yesterday, right? Yesterday we looked at the monthly time frame. I explained the monthly time frame, and we established this high. The resistance is a very strong resistance that has been failing to break for a very long time. And then we have clean traffic here, right? And then price came and it made a low right here. It made a low right here, and then it rejected, created support, and then it gave us a move up, which created resistance around this area. And then if we look at where, well, the close action, well, when price broke here, it went up, established this high, the previous resistance, and it got rejected. Well, it's been rejected for a few months. It's going to break, but at the moment it's being rejected. And price came all the way down to retest this resistance. So when price broke above here, it broke with this candle. This is the candle that confirmed the break because it closed above. So price had to come, it to retrace down here to retest the previous resistance, which is now support. And the reason for that, like we discussed yesterday, it's because price has to retrace, it has to correct for it to give you the next impulse. If it doesn't correct, then price will be moving in a straight line, and we all know that price does not move in a straight line. So it has to retrace before it moves up. So when it retraced to retest our previous resistance, now support, it created a new low. we have a low right here. So when we got our weekly time frame, since we're starting on the weekly time frame, we have a low and we have a resistance. And then from here, there isn't much to put because price is right here. And if price is here, it's either we're looking for price to break above to see what's our next resistance, or for price to break below to see where it's going to go next. And for us to put a support and resistance around this area, we have to go on the daily time frame because that's where price is more clear. So if you can't see price properly on the higher time frame, it's better to go down to the lower time frame to see how you can break it down for you to understand it properly. So when we go to our daily time frame, we adjust our zones because now price is different from the weekly time frame. We're using the weeks on the weekly time frame, but it's not the same as on the daily time frame. So we start adjusting our zones again. We just have to adjust them a little bit. This zone, we just have to adjust it over here. We're trying our best not to have our lines cutting through all the candles so that our work stays neat. And then this zone, I'll adjust it to somewhere here. It's exactly where it was. And for the meantime, we would put a support right here. Why would we put a support right there? Because when price came, if you look at price here, since price has been going up, right, we're looking at an uptrend. So when price gave us a rejection, it went up, it created support, this support that we've highlighted, right? And then price gave us a high, and then it created support again right here. It gave us a new high, and then price came back to retest this support. It did not create a new support, it just used the previous support. The price came back all the way up again to the previous high, and then it created the new support right here. And then price went all the way up to our resistance, and then price is corrected all the way down to our previous support, which is being rejected today. If you remember from yesterday, we discussed where price was going to, and then today our sales were correct, so price came all the way down. And this is the area where we have said if price breaks this low, then the trend is changed. It's no longer an uptrend, it's a downtrend, because this is the most recent support, and price has to retest and reject that support. It can't go below. If it goes below and creates a new support, if it creates a new low, then the trend is changed. Instead of us giving to get a new higher high, we're now just getting a new low high. So the trend would have changed. So that's where we are on the daily. Then we move on to the 4-hour time frame. On the 4-hour time frame, that's where price is more clearer. So on the 4-hour time frame, our zones look good. We just have to put it on our weeks according to the 4-hour time frame. This zone is very much correct. We just have to adjust it to the price at the moment, and then we take a new zone and then we put it down here, because for price, if it breaks this low, price has to come all the way down here. And there's clean traffic. Like yesterday we explained what clean traffic is. It's clean traffic, so it will be a clean trade. That's a very nice trade. And another support that we would put is somewhere around here. Why are we putting support around them? It's because before the movement that happened today, this all happened today. So for the past couple of weeks, prices had been consolidating right here. Price did try break over there. It tried breaking the resistance. So it rejected here. Here it failed to reach the support, and it went on to create a new support right here, right? And then it came back to the high, and then it came down to create a new support right here. However, price, when it pushed higher over here, it was supposed to break above, but then, as we suggested, as we talked about yesterday, if they don't have enough people who are selling in the market, they're going to drop price lower so that more retail traders buy for them to get what they want. So there weren't enough buyers. Retail traders were not buying enough. So the ones who were buying and they added sell, they dropped the price lower so that the ones who were buying can lose money, and then more people can enter sales. The more people who enter sales, the more people they enter sales, they have enough orders for them to buy the price. So that's why price came all the way down here to make this low today. And then when they say price is already priced in, that's what they mean. So price was already priced in. That's why we had this huge movement. Price came all the way down as a liquidity grab. They wanted more retail traders to sell price so that they can buy it. When they had enough orders around here, they had to just wait for news so that when news comes, it pushes price higher. And this is how we know that they were planning on it, because if you check the 1 hour time frame, if you check the 1 hour time frame around this if you check the 1 hour time frame around here, this was already our support. We had this support from our weekly analysis, so we knew this support was already there. So when price came all the way down here, right, price rejected here, right? And then a lot of retail traders bought because they knew news was coming, and price has rejected a strong support. So everyone was expecting price to move up from here. However, there was a few hours, there was like 2 hours before news. So the next candle dropped price lower, and another candle dropped price lower, which was to tell retail traders that price has more potential of going lower. So a lot of retail traders closed their open positions, their buy positions, and they opened their sell positions. So the moment they opened their sell positions, if you look at this, the previous 1 hour candle, before it opened, the last 1 minute candle of that 1 hour candle was huge, and that was to fool retail traders into selling. So a lot of retail traders would be thinking price is going to go lower. If it's closing like this just before news, price is going to go lower. So a lot of retail traders opened sell positions, and those sell positions are what pushed price to make this huge move. Was 90% of this move was caused by, let's say, maybe 2 minute candles. 1 minute candle. So there wasn't even that much volume for price to go as high as it did. So that's how it all worked out. So if we go back to our 4 hour time frame, we have all the zones that we need. We have our support right here, which is being retested. If price closes above, then it's now support. Right now it's still resistance. It was support before price broke. When price broke below, and now it's being retested, it's now resistance. So if price closes above, then it becomes support because price is now pushing higher. So when we go on our 1 hour time frame, when we go on our 1 hour time frame, all we have to is adjust just a little bit, and instead of using this is for the 4 hour time frame. For price to keep going higher, it has to go above this resistance. So on the 1 hour time frame, we have minor resistance. So you know that this is for the 4-hour time frame. So when the price goes above this high and establish this high, you have to wait for price to give you a bearish candle. It has to give you when price closes above this candle, right? It has to give you a bearish candle retracing to create a new support. And then when price rejects the support, when it gives you a bullish candle, then you know that price is rejecting that price, and that's how support is created, and then you have price moving up. So instead of having this support or resistance, you remove that one and you adjust your resistance to the new support that is being created. But for now, we're still waiting to see how price will turn out. So from yesterday, we did say price was in a downtrend. Price was in a downtrend. It's in an uptrend on the higher time frames, but for now, if you're looking at the 1-hour time frame, it's in a downtrend. That's why I always tell you to concentrate on the time frame that you're trading. If you're looking at all time frames, then you're going to confuse yourself, because some zones and some trends are for that higher time frame or for that lower time frame, and if you consider all time frames, then you confuse them. However, if you are trading the 1-hour time frame, you can look at the 30-minute time frame to give you more information. Same as if you are trading on the 4-hour time frame, you can look at the 1-hour time frame. If you're trading on the daily, you can look at the 4-hour time frame. But you should not look at all the time frames, because they'll confuse you, because some zones are for that time frame only. So for this time frame, right, we're on the 1-hour time frame. So everything that's below the 1-hour time frame is following this. So right on the 1-hour time frame, we have a downtrend right here, which is currently being broken. If price stays above, we might see price going up, we might see price going higher. So how do we draw this trend line? Yesterday we talked about Elliott waves. So we mentioned that with 3 impulses and 2 corrections in our wave system, right? So we discussed this. If it's a downtrend, you don't have to struggle to see what trend it is. When you open your chart, you should just see if price is going up or if it's going down or if it's going sideways. Right now our price is going down. So if it's in a downtrend, we said in our wave system, wave 1, 2, 3, 4, 5. So we said the move that's in the direction of the trend, that's our impulse. The move that's in the direction against our trend, that's a correction or a retracement. And you use the peaks that those correction and retracement give you to draw your trend line, because when the banks or the institutes were placing their trades, right, they placed their sell orders right here, and then price moved all the way down to create this new high. This is our new high. So when price created a new high, a lot of retail traders were selling also, because they've established, okay, price is going down, so they're going to enter for sales also. So when a lot of retail traders enter sales, the banks are going to take some of their profits, which give us this correction to create this support. The reason why they take some of their profits is because if the retail traders are winning, then if the retail traders are winning also, then there's no one losing money. If there's no one losing money, then they can't win. So when they take some of their profits, they bring price somewhere close to their previous area where they had their orders, or somewhere very similar, to create a new low. So that new low that's being created, that's them placing more orders. So when they place more orders on this new low, right, price sells again to create a new high. So that's why yesterday we talked about how you can wait for price to break the previous low, and then you enter to ride the rest of the impulse. Or you can notice when price is rejecting the new support that has been created, and you enter there with more positions when price breaks the low. We discussed yesterday the first entry is more risky than the second entry. This is more of a safer entry. This is more of a risky entry. So when price creates a new high, around here, they take their profits again to. You guys give me a minute. I just need to put my laptop on the charger. Alright, so when price creates the new high, they take their profits again to push price back to retrace or correct so that they can have more positions in, and they can fool traders into buying when they actually want to sell. And that's how they manage to drive price up and down. That's how we know that price is not moving in a straight line, because they have been in the other direction for a little bit, so that people are being fooled, people are buying when price is actually going to down. That's why we always wait for the price to be broken. So that's our trend on the 1 hour time frame. So if you go on your 4 hour time frame, we go on our 4 hour time frame. We'll actually we can't put the trend line on right here, because right now we only have this tick, and if you're putting your trend line right here, this was our previous trend. So before this action that happened yesterday and today, this was our trend. That was our trend. Actually, let's delete everything and put the trend line on here. This was our previous trend. How do we draw that previous trend? So when price gave us an impulse right here, price gave me an impulse right here, gave you an impulse here, right? And then price corrected and it made a new low right here. It did not reach our previous low, but it created a new low. When price creates a new low, we know that price is high chance of pushing higher, and when it pushed higher, it created a new high, which gave us a new low. And when price gave us a new low, we're able to establish our trend line. You always need to have two impulses for you to be able to draw your trend line. If you don't have two impulses, then your trend line is probably going to be incorrect, or it won't work for long. So you always use the most recent two peaks of your trend of your impulse wave if you're drawing your trend line. So when price gave you the first low right here, and then price gave you this low, you were able to place your trend line here. And then when you saw price coming all the way down, and then it gave you a rejection candle right here, this is a good rejection candle. It touched your trend line, right? And then it gave you a rejection candle, that's two confirmation. And then the next candle that came was a strong bullish candle. That's an edge confirmation. So when you have more confirmations, it's a strong trade. It's only a shame that there was a resistance, a very strong resistance right here. If there was a strong resistance, price with high chance of going higher. This price would have gone higher. So that was our trend, right? However, it got broken yesterday, and as you can see, price came, it tried rejecting, but failed to reject. It created a new high. It failed to go all the way up. If you look at the past, price has been consolidated all the way here, right? But when price when price came to the trend line again, it gave you a new high here. It failed to go to the high, to our resistance. Then, like I said yesterday, the moment price fails to go to your high, to your previous high, and it creates a new high, then that means price is pushing lower. Price created a new high and it gave us a new low. That's what happened, because this was the break, and then price retested, giving us a new high. So if you saw price not reaching your previous high, and then it gives you the bearish candle, that was a confirmation that price will continue lower, and that's what happened. That's how you would have read the price on the 4-hour time frame, and then the 1-hour time frame would have just gave you opportunities, total opportunities to enter. It gives you more clear information. So this is the 4-hour time frame trend, right? If we go on the daily, this is our daily. Go on our daily, we are in an uptrend. We would put our trend line somewhere here. The reason why we would put our trend line there.
Hello, good afternoon, guys. Hello, Queen. Hello, Queen.
So we draw our trend line all the way up.
Hello.
And then price broke the 4-hour time frame trend line, right? It came all the way down to our daily trend line, and price is rejected there. You guys are waiting on. You guys have questions? Sorry, guys. What's the question?
We can't hear you properly.
You can't hear me properly.
Yeah, we can hear you.
Oh.
The voice is far from the laptop or from the
Can you get closer to the mic or something?
Oh, my bad. I forgot to plug in the mic. Sorry about that. All right.
Yeah, that's perfect.
Where should we start? Should I just continue from where we were? Can you guys hear me?
Yes, it's much better now.
All right. So I was saying, when price rejected, it created a new low right here, right? And then we have a new low right here. And so these are our two recent peaks before price came all the way down here. So these are our two recent peaks, and that's what we use to draw our trend line. And then price broke the 4-hour trend line, right? And it came.
Yes, we can.
And then it came down to our daily trend line, which is being rejected today. If price had stayed below the daily trend line, then we would have said the trend has changed on the higher time frame. That means all the time frames below that are now in a downtrend. So that's how you can have different trend lines, different trends for each time frame, because you always have to stick to your time frame. That's why we say it's better to concentrate on that one time frame that you're trading, because if you do concentrate on multiple time frames, then you're going to confuse yourself, because sometimes on the daily time frame, like here, it's an uptrend, but then on the 1-hour time frame, it was a downtrend. So like I said before, you have to draw your zones on the monthly, weekly, and daily. You just have to know where they are and properly highlighted, so that when price comes down to those areas, you know, so that whatever you are doing on the lower time frames, you have to look back on the higher time frame to see, okay, this is what's going on now. So you don't have to look on the higher times from all the time. Just make sure that you have highlighted the important areas. So, do you guys have any questions? Do you guys have any questions?
Yeah, I do have a question.
Yeah.
Now that you've drawn this trend line on the daily time frame, so if you are to trade now, is it this daily trend line you're going to follow, or the trend line you're going to do on the 1 hour?
If I was going
4 hour?
to trade right now.
Yeah.
So you see on our daily time frame, the trend has been rejected, right? The trend
Yes.
line has been rejected, right?
Yeah.
And then when you go on your 1 hour time frame,
It's in a downtrend.
it was in a downtrend. Price was in a downtrend. Remember from yesterday, we drew a trend line right here. It was in a downtrend, and then price broke today. So the news pushed price higher. So like I said earlier, they pushed price down to give us this low. As you can see, how these candles don't have any volume. See, these are very tiny candles, but they as much as they don't have volume, they kept pushing lower. And the lower they pushed, the better the price they could buy. So they kept pushing price lower so that they could buy at a very nice price. So if you had your buy limits right here, it will be a very good price to buy, because that's where your support is, even on the daily and the weekly. There's a very strong support there, and news just did all the work and pushed price higher. So we have a trend line rejection on the daily, and price is breaking our down trend on the 1 hour time frame. That's more confirmation that price should be trending higher from here. So right now, I would expect price to retest our previous high, which is somewhere around here, or even if it comes down to somewhere around here, for it to continue pushing higher. If it continues pushing higher from here without coming to retest these two zones, then it's a good trade. It's moving in a straight line, but then there are high chances that price might just weak you down. So it's better to watch price go high, right? It's better to watch price come down to retest or to retrace, and then it pushes higher. So when it breaks this high, that's when you enter. So whichever high it gives us, whenever it makes the downtrend to retrace, we wait for the retrace to happen. When it gives us a support, then we will enter for the buys. Right now, it's not going to be a very smart entry, because price can reverse anytime. So you have, so far you have two confirmations. When price creates a new support, you have the third confirmation, and from there you have your entries.
Another question. Can't we enter after the end of the retracement?
After the end of the retracement?
Yes, like to catch the uptrend, the impulse wave. Really.
Yes, you can. So right now we are expecting price to come at least somewhere here or somewhere here, right? Around this area. That's where we're expecting price to come, right? So when it's giving us bearish candles, right, you wait. The moment it gives you a bullish candle, then that's telling you that price is rejecting. You can enter then. You would have a tight stop loss. You put your stop loss below the low that has been created. So you would have a tight stop loss, and you were expecting price to go higher. And then when price comes back to this high, you can even enter more positions, because these positions that you have entered around this area, you would have put your stop losses on break even. So those are already risk-free trades. And then when price goes higher, you can even enter with more positions when it breaks the high. And you only have to watch out for the risk that you have there, which can be well managed, because now there is volume. Price is moving in the direction that it's going. All we have to do is wait for it to create support. Does that make sense?
Yes.
All right. Any more questions?
So just I think the time is almost up, but just a quick question.
Yeah.
Let's assume, because I'm still confused with this uptrend and with the multi time frame. So let's assume on the daily time frame right now, the trend is in an uptrend, and while in your 1 hour the trend is in the downtrend. I mean, let's assume, not using this example though. So let's assume the trend is in a downtrend. So is it that we have to follow the downtrend in the 1 hour and look for uh and wait for the market to make a new low and a new higher low before entering, or we have to focus on the 4 hour time frame, which is in an uptrend? I don't know if
Um.
you understand what I'm trying to say.
No, because if you're trending on the 1 hour time frame, right? As long as your 4 hour time frame is highlighted and you know where it is, you can trade the downtrend on the 1 hour time frame using the same formula that I'm teaching you right now. The same, you have to wait for resistance to be created for it to go lower. You can still use that information as but the thing is, you just have to understand that your 4 hour time frame trend that needs to be highlighted so that you know when price reaches that area, you should not be looking for sales. You should be looking for buys now. That's why I was saying it's a good thing to know what type of a trader you are. So if you are entering a trade, you have to know how long you want to hold it for and why you're entering that trade. What time frame are you trading that trade, and trade that trade for that time frame.
Okay, okay, okay.
All right, any more questions?
We have less than a minute. So.
Yeah, so that's all for today. We can do another stream tomorrow.
All right, I'm free tomorrow, but I don't know about what.
All
So
right, sure.
anytime, whenever you're available, you can just let me know on Instagram. Then I'll come and join you.